Good afternoon, or hello everybody. Mark Mousseau speaking. And what I want to do in this recording is actually go through the offer to purchase, the unit purchase agreement with you, as with as much detail as possible so that everybody understand what they're signing basically. And again, you're free and you're welcome to give us a call if you have any question in regards to the agreement. We're there for that. Both myself, my partner, Anand, and our team. So if you have any questions, please feel free to call us. Thank you. So let's get going. So the residents on Parkway offer to purchase. So let's go to this. Okay. The first page is very simple. It's the identification of the parties. So effectively, the unit that you're buying, you'll see that through your master sales plan, purchaser's name, purchaser's address, postal code, cell phone, business, citizenship. It's important for us to know if you're Canadian American or from overseas. Passport numbers, you don't need to give it to us immediately. Just because we will need this for the incorporation of the U.S. company. So we'll need that information in the future. Uh, and now identification of who are you dealing with. Bridgeport LLC. So this is in Lake Charles, rental agent. Mortgage will be held by Bridgeport Holdings. And Bridgeport Management again, out here is the manager. Okay, so this is identification of the parties. Now the unit purchase agreement per se. So you are hereby offering to purchase for X number of dollars in US dollars, again, please, okay, the following property, basically. And what we've done here is we've separated this acquisition into four different asset base, okay? The first one is land, building, furniture, and appliances. The reason we do this at this point is for you to be able to take depreciation and to know upfront what you're entitled to. In Canada, we're not allowed to depreciate land, but we're allowed to depreciate building, furniture, and appliances. So this, again, I would recommend that you speak to your accountant about, but this is what you're allowed. It's a split, if you could say so, of the purchase price in relationship to what is depreciable, okay? You agree to pay the purchase price as follows. So basically with a deposit to Bridgeport Holding LLC and Trust. Again, we will not cash your deposit until you have exhausted your 10-day recession period. So don't worry about the deposit. You make it payable to Bridgeport Holding LLC in Trust. In the amount of, again, every property has a different price points, deposits, mortgage, and so on. Please refer to your agent, your representative of the company, to identify exactly what the deposit is all about. With a second deposit payable to Bridgeport within 10 days of the end of the cancellation period, which should be, okay, that will be credited as part of your down payment and on the purchase of the unit at the effective date, okay? Afterwards, we're talking about upon the purchaser, assuming or being granted as of the effective date, is proportionate share of the existing mortgage relating to the unit or a new mortgage to be granted by a first mortgage institution in the amount of. So basically, you will be either assuming a mortgage or you will be getting a brand new mortgage for your property as a first position. The same thing with the second mortgage. And again, these two amounts, this and this, will equate to 70%. Okay, so basically a deposit, you top up your deposit, you assume or you get a new first mortgage, and you put your down payment down. Well, deposit first and second mortgage will be sufficient for you to purchase the property. Let's move on. Now this is important. Okay, the parties agree that notwithstanding the provision herein, the agreement and all other agreements, declaration, or document executed by the purchaser on the date shall not be binding on the purchaser if the vendor receives written notice evidencing the intention to withdraw from and not be bound by this agreement no later than the 10th day of signature of these documents. So basically this is your out clause to make sure that you're not stuck with a contract that you may not want. And in all honesty, people, I'll say students, investors, purchasers, we want to have satisfied customer. Our reputation, our ethics are 100% to make sure that you have the opportunity to pull out. We will not cash your deposit, as I mentioned. Now, failing to receive a receipt, we'll consider this transaction actually to be completed, and then we pursue and we move forward. Okay? Transfer the unit. Well, you agree the within transaction shall be deemed to be effective as of the effective date. Okay? And the vendor agrees to forthwith deliver to Robichaud, which is our legal firm, a registrable transfer of land, okay, to the purchaser's unit to be held pursuant to the trust agreement as Schedule B is talking about. What's that all about? Well, listen, if you give us $40,000, $50,000, $60,000 as a deposit, wouldn't you want to have some sort of security that this transaction will occur? So what we're doing is upon receiving your deposit, upon receiving all the document, we will actually execute the land transfer. So we will actually sign off that we're transferring condo XYZ to you on the effective date. We'll sign this document, we'll give you a copy of it, and you will see in these documents that there's a trust agreement that Robichaud, Mize, Wad, Zach, Richardson, LLC will register this this transfer of property to you upon being able to do it at the effective date. So this is basically to protect yourself. Okay. 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 This is basically what I just said. All this is what I just mentioned here for your information. Mortgages. Well, we go back to the mortgage. The vendor shall arrange a first mortgage. Shall be assumed. You'll assume your proportionate share or the exact mortgage if it's a brand new one. The interest will be 6.5%, okay, per annum, repayable in monthly blended payment of interest and principal on the first day of each month. Don't forget, we will be making the payment on your behalf. You do not have to make mortgage payments. You will receive a statement from us confirming that, and you could always check with the bank. You'll have the banking information, so you could always call the bank just to confirm these payments have been made. But technically, you'll be able to view your mortgage payment and your cash flow that will be deposited into your account. We will negotiate terms and conditions of this mortgage satisfactory to us, but they will not exceed 6.5%. It will not be below 25 years and an amortization of 25 years and a term of 5 years. The mortgagee may also provide that the mortgage at his sole option shall be entitled to exercise its mortgagor's right to vote according to condominium corporation bylaws. What this means is very simple, is as a mortgagor, they are always allowed to, the banks are always allowed to act on your behalf into any condominium matter. So basically they have the first right to vote. Simple as that. Okay. Okay. The mortgagee will assign its rent to the mortgagor, okay, in favor of the mortgagor. That's normal. When a financial institution lends on an investment property, they would want to have an assignment of rent, meaning that they will collect the rent on your behalf. And technically what will happen is that we will collect the rent, we will pay the financial institution. And that's part of the negotiation. It's also a bit part of what happens when Canadian investors buys in the States. The bank wants to protect himself as much as possible. This here is basically the permitted encumbrances. So you will have a first mortgage, a second mortgage, all the encumbrances that are into a condominium corporation and so on, and they are listed at Schedule C of this agreement. Now this is important. The purchaser acknowledges and agrees that the vendor, at the expiration of the mortgage financing relating to the unit, will use their best effort to what? Well, firstly, attempt to arrange mortgage financing for the maximum amount available to discharge the existing first mortgage. So what we'll do is we will shop for you with a financial institution a refinancing of your first mortgage. Secondly, if the mortgage cannot be arranged, the vendor shall use their best effort to negotiate either an extension of the existing mortgage financing or new mortgage financing to replace the existing financing. So basically, we'll work for you to repay that mortgage or to extend it for a period of time. The purchaser agrees to execute and deliver all necessary documentation as is required by the vendor to arrange the financing contemplated in Article 3.1, including without limitation, executing and delivering all assignments, agreements, direction, powers of attorney, authorization, pre-authorization check, forms, and other document as may be required by the mortgagee. So basically a mortgage application, proof of income, whatever the bank needs, you agree that you will supply it to us and therefore will supply it to the bank. If you fail to supply us the information, basically what it means is that you're saying we're not buying the property. Okay, I think I need to clarify this. Section 3.4 is very, very simple. If notwithstanding reasonable notice from the vendor or the mortgagee, the purchaser fails to comply with the requirement of this article, the purchaser shall conclusively deem to be in breach of this agreement, and the vendor shall have the right to retain all deposits paid by the purchaser in addition to and without prejudice to any other rights the vendor may have for damages and or specific performance of this agreement. This looked like a very harsh statement, but what it basically means is that we trust you to move forward in a property. And you know, in 31 years of experience, I've seen purchasers or vendors say, well, I can't give you my tax return, it's not ready. I can't give you this, it's not ready, just for a way to get out of the transaction. And what we want to make sure is that you know and understand that the transaction is binding. We're ethical. We wrote it up front so that you know what you're getting into the day that you've got your full deposit. Really, you're purchasing a property because we're financing the property based on what? On having solid investors. Okay. Adjustment in possession, very simple. Realty tax, including local improvement charge, utility rate, and interest on full amount of the mortgage are to be adjusted as of the effective date. So the day you'll take the property, you're the legal owner, taxes, insurance, and all that will be adjusted as of that day. Now, if you by any chance, if you owe us some money that you haven't paid for whatever reason, you're short $3,000 or $4,000, $5,000, after the effective date, we will charge you 12% interest on that money. Basically, covenants and representation. Basically, this agreement will survive and warranties shall survive the closing of this transaction. You agree that you will not register any caveat against the land just because you've signed an agreement or purchase. It's a standard clause in every contract. What happens is that if you were to register this agreement on title, it would not allow us to do construction financing on the property. You shall not sell or transfer your interest in this unit without obtaining from the assignee, so a covenant and agreement to be bound by the same terms and conditions as the agreement. So we're not saying that you cannot assign this contract, but we need a letter from the assignee that he is in agreement and he's bound by the same terms and condition of this contract. You understand that we have powers of attorney to engage negotiation with mortgage brokers and so on and so on. So that is standard. You also confirm that the purchaser declares that he is not purchasing the purchaser's unit for his own use and enjoyment, and that he does not have any present intention to occupy the purchaser's unit. What this is all about is very simple. If you had the intention to use it personally, some of the deductibility would not be available to you. The purchaser hereby irrevocably grants the vendor his power of attorney to negotiate, execute, and register the permitted encumbrance, cause the execution, delivery, and registration of any document, and the doing of any act required pursuant to the agreement, including the execution of the co-owner's agreement. So basically, you're allowing us to proceed on your behalf. This is basically the same condition as before. If you contravene with any of the provision of Article 5, in addition to other remedies to the vendor may at their option treat this agreement as being terminated, and deposit shall be forfeited as liquidated damages. Same basic contract. Condition: this agreement and all obligation shall be conditional upon the purchaser being approved for first mortgage financing and secondary financing. This condition is inserted for the benefit of the vendor, naturally. If you don't qualify for your first mortgage in any way, the transaction will not occur. It's as simple as that. In the event such condition is not satisfied or waived, as aforesaid, this agreement shall be subject to Article 6.1, be null and void, and the purchaser shall be repaid as deposit without interest or deduction, and all promissory note delivered to the vendor shall be returned forthwith to the purchaser, and the vendor shall not be liable to the purchaser for any cost or damage. So basically, if you don't qualify for mortgage, okay, if you don't qualify for mortgage after we tried everything, the transaction is null and void, and we will refund your deposit in full. If the purchaser is not approved for mortgage financing, then the vendor may, at their option, accept and approve a vendor take-back financing in the principal amount, being the difference between the principal amount set out in Article 1.2b and the purchase price less the deposit set forthwith. So basically, we have the choice to grant you the first mortgage if we wanted to. Okay, now, interpretation, closing, well, basically these are words. So closing or completion of transaction mean the date subsequent to the withdrawal period referred to in Article 1.3, which is your 10-day. The effective date is July 16, the date upon which a purchaser is deemed to be transferred the beneficial interest of the unit. This is the description of the land, the mortgage, what we're talking about, mortgages here, permitted encumbrance, project, the residence on Parkway. Purchaser shall mean the description of the person identified on the first page. Every provision of this agreement is intended to be severable. What this means basically is that if something came to be not applicable, it doesn't mean that the whole contract is null and void. What you do is you take away that clause and say, okay, that does not apply, period, and we move forward. Okay, this agreement shall be governed by and construed in accordance with the laws of Louisiana, because we're in Louisiana. Any unsold units in the project shall remain the property of the vendor. So we will keep whatever doesn't sell, but properties will sell. This agreement constitutes the entire agreement between the parties who agree that there are no representation, warranties, collateral agreement, or conditions, whether written or oral, express or implied, which affect this agreement other than as expressed herein in writing. The purchaser does hereby expressly acknowledge that no person has been authorized by the vendor to make any representation to the purchaser except as contained herein, and if any such information or representation has been given or is made, the purchaser has not relied upon the same. So basically it's saying that you rely on what's on the contract, basically. Okay. Wow, this is another. The purchaser does hereby expressly acknowledge and agree that the vendor, by its agent or employees, have advised him to seek independent professional advice on the taxation and legal aspect of this agreement. The purchaser acknowledges that neither the vendor nor any other agents or employees has made or hereby makes any representations with respect to matter of taxation. The purchaser agrees that the vendor, its agent or employees shall not be responsible for any taxation consequences, nor without restricting the generality of the foregoing for its deductibility of any expenses or any loss, cost, charges, or expense therefore. What this basically means is that you know by this that we have not made any implication that the expenses are tax deductible. Not the agents, not the vendors, not the promoters. No one is telling you that this is real. You must verify that for yourself. Bon. The vendor shall be entitled to assign this agreement to any party. So this is allowing us to assign this agreement to a third party. It doesn't, we're notifying you that we want to have the right to do it. The purchaser shall not be entitled to assign this agreement except in accordance to 5.1, which we talked about, which is the clause that says that the person that you assign a contract to must confirm that he's willing to accept all of this contract that he's signing with us. So basically, it's a way for us to say, listen, we're allowed to sign it, you're allowed to sign, but we're telling you there what the conditions are. Time shall continue to be of the essence. So basically, we want to make this as express quickly as possible. Okay, this is important. In the event of default hereunder by the purchaser, continuing for a period of 10 consecutive business days, all deposit paid hereunder shall be forwarded to the vendor as liquidated damage and not as penalty. So basically, you have your 10-day to cancel, but afterwards, the deposit you're putting in, if you don't pursue it, you consider the deposit to be forfeited to the vendor. This agreement constitutes an irrevocable offer to purchase, which must be executed by the vendor by midnight on the 90th business day after execution by the purchaser. Okay, so what this means is that you will sign this document and we have 90 days to sign it and give you a copy of it. We will do that very quickly after because we want you to have a signed copy of the documents or the offer to purchase of all your documents actually in your possession. Okay. Any document ever personally, so that's good. Any document mail as aforesaid shall be named to have received by and given to the address of the third. This is basically interesting stuff to read when you have nothing to do. You hereby say that you agree that this is written in English. The date, the signature, your signature right here. Sign and seal in the presence of, so we need a witness. The vendor hereby accepts the foregoing offer and covenants and agrees with the purchasers to carry out and perform the same on the terms and conditions set forth, and this is where we actually sign as a company. Okay, there we go. Schedule A, description of the land. It is left blank because this is what the lawyers will, at a future date when we have the condominium incorporation lot, plan, block, and so on, we will be writing this up at that point. Schedule B is the trust agreement. Remember, we talked about this. The vendor, the purchaser, and Monsieur Robichaud, which is a legal firm. The vendor shall deposit a registrable transfer of land for the purchaser's unit with the vendor's solicitor, which transfers of land shall not be used, released, or registered except and only when and if the following condition have been satisfied. Okay, the purchaser has paid to the vendor all monies due and owing to under the purchaser unit agreement and all other agreements delivered. The vendor have provided notice in writing to the vendor solicitor that all monies have been paid in full. So basically, this is a trust agreement. This is what we agree to do. The parties agrees that if the purchaser has not paid the vendor all money due to it within 5 business days of demand of all such monies, the purchaser thereafter relinquishes all of his right under the unit purchase agreement, and the vendor solicitor shall forward a transfer of land for the purchaser unit back to the vendor. So this means that if you don't proceed, the lawyer will actually send us back the land transfer. Again, Bridgeport, purchaser, and Robichaud Mize, the legal firm that we're hiring. Schedule C, permitted encumbrance. We wrote ABC Bank Louisiana because we will most probably have many banks lending on a project of this size. Bridgeport Holding LLC, mortgage documentation, encumbrances, liens, condo corporation documents. So everything will be listed there on your final document. And basically, this is it for the offer to purchase. I hope this has helped. And hopefully, if you have any questions, please feel free to contact us. Thank you.